What's up, guys? My name is Anthony, and today we are back with another technical analysis video on the Zilliqa digital asset. This is the third TA video I've done on this one, and I just wanted to make the announcement that from now on, I will be making regular Zilliqa technical analysis update videos whenever something significant happens on the charts. So if that sounds like something you're interested in, definitely make sure to subscribe. And if you've watched my last videos, we have been talking about a cup and handle pattern. If you haven't, I suggest watching them. I'll put a link up top in the corner of the screen there. But yeah, I just want to show you guys some of these comments because they were definitely entertaining. I just basically asked, would you like to watch more Zilliqa TA videos? And a lot of people, yes, thumbs up, will do. This guy says, hell yes. This guy, every day, Michael Joseph, I hope you watch this. Let me know in the comment section if you watch this and you get this shout out. Every day, twice a day, start a Patreon. I'll pay. So we're not going to do twice a day every day, but we are going to do that for you guys. So let's get right into it. Let's take a look at the big picture here. So I wanted to start with this view, and what you're looking at here is the weekly chart. So every candle here is 1 week's worth of price action. So let's just point out the obvious here as to how serious of a correction we had, right? A parabolic run up and then a pretty steep correction for the last 2 weeks. We are now heading into, or we just started yesterday, week 3. And let's talk about what has happened since the last video. In the last video, I talked about these Fibonacci retracement levels. I showed you to them there, and I want to give you an update on them today. I do want to talk about the significance of this level right here. Now, what this is the 0.5 retracement level of our swing high. And of course, if you've been in Zilliqa, I'm sure you're well aware the swing high was 2.9 cents, right? So we have come halfway down. Now, that's a significant price level for us because handle patterns in a cup and handle, remember, the big picture, we're talking about the rounding bottom, which we definitely obviously had, but now the question is if this rounding bottom will turn into a cup and handle. So here's the cup, here's potentially the handle. Now, typically, the handle forms within the top half of the pattern, right, of the high point of the cup. We fell right down to it, and then we bounced up. I did talk about in that last video how 1.6 cents would be halfway down. I talked about how if we hit that level, we'd probably have a bounce up. So I'm proud to tell you guys that that did happen. I felt really good about that because I really always try my best, not only for myself, but for the community here. And also, I didn't say this before, but if it's your first time stopping by the channel, just consider subscribing if you are passionate about including cryptocurrency in your overall wealth building strategy, or of course, if you're just passionate about Zilliqa. And on this channel, we make news videos, TA videos. We do a lot of Chainlink on this channel. And you can just look through my videos to see some of the other projects we're passionate about. Recently, we did Algorand, we did Chainlink, we do Chainlink all the time, Cardano, etc. But the next thing I want to do for everybody is give you an update on this descending channel. I know I have a lot of lines here, but I will explain all of them for you. And I want to talk about what we've been doing. So again, here was the 22nd. We saw this downward movement. Now, what happened since that last video was we did come down to the median of our descending parallel channel here. And that also corresponded with our 50-day moving average, which is this purple line here. And I did mention, of course, in my last video, how that could be a significant level to jump off. So let's just talk about what is going on as we speak. These are the daily candles. We had a doji candle here, which is something that basically shows uncertainty. But you can see we have broke out above this line. So I'm not convinced that this is a strong upwards breakout, but we'll see what happens over the next 24 to 48 hours. But this is a good sign. If the price continues to move up, I would expect to hit resistance at the 2-cent level. Keep an eye on the 2-cent level, because if we can break out past that, there's not as much, if you can look over here, there's not as much overhead resistance, and there's not one clear area where there's a lot of it. You can see that there was a lot of sideways action here for multiple days in a row, really almost like a week. But before that, we were really just jumping around and being a lot more volatile, and there wasn't one level, or there isn't one level kind of like this where I could draw one of these horizontal lines and show you that there's significant resistance overhead, which could be a good thing, because I'm going to say if we break 2 cents, I think it will be relatively easy to get all the way up to 2.5 cents or 2.6 cents. And as you all know, if you've been watching my previous videos, this 2.6 cents or 2.68 cents, that's the level that we need to break out of to have the bigger breakout if the cup and handle pattern is to play out. Okay, so this is going to be an interesting week. It's going to be a telling week. Just to remind you, if we can break past this yellow line, we can see us go as high as potentially 5 cents. Or at least halfway up, I would say. I've been saying 3.9 cents has been my upside target if we break out there. You know, there are key moments when you look at technical analysis. You're looking for confirmation, right? You're looking for breakouts, and you're looking for confirmation of those breakouts. All right, and one of those key levels for that to happen is 2.688 cents, if I'm going to be really specific with you. So that's your bullish scenario, but let's talk now about what could happen in a bearish scenario. So you wake up tomorrow and the price is lower. Where could we be falling to? Well, the first level of support, which we should see, is this 50-day moving average, which has moved up now. These lines move over time. So that is 1.674 cents right now. And that, if we fell down right now, if we dumped, that would be the very first line that I would look to for support. Could be a buying opportunity. If you're looking to day trade this, and I'm not giving financial advice, I never am, but if you are, that might be an interesting level to try and get a really quick trade within 1 or 2 hours. But if we fall back into this descending channel, of course, the median would be, let's say a couple days in advance, would be 1 point. You're not going to like these numbers, by the way, but I have to just share them with you. Just to do my job, I have to show you what the charts are telling us. This is 1.37 cents. If we fell all the way down to the bottom, that would align with our 100-day moving average. This is a less likely scenario. This is actually the least likely scenario. But that would be really the 1 cent level. I do not think it's going to fall that low. But it is possible that we'll fall into this support zone, this bearish scenario, because you can see back over here, we had a lot of that sideways price action that I talked about. We were really just consolidating. So those levels could come back into play. If we break past this 50-day moving average, I do think it's possible that we will certainly see 1.3 cents, or maybe as low as 1.2 cents. That could be a worst case scenario. And if that happens, I also want to say the cup and handle pattern that we've been watching for a while now will become invalidated, most likely. And I'll start to look for a new pattern for us. All right, hopefully none of that happens. I want to see us push to 2 cents within the next 48 to 72 hours. So we'll see what happens. Let me know in the comment section, am I missing anything on the charts? What are you seeing? Do you have any predictions for this week? I'd love to know, because, I make videos to teach you, but I also make videos to learn from you. I'm always trying to learn more and more about technical analysis and become a better trader and a better investor. You saw a pretty big dump this weekend, and if you are new to cryptocurrency, this is one of those moments where it was kind of like trial by fire, but that stuff does happen, unfortunately, from time to time. I mean, I named my YouTube channel Crypto Ride, and I named it Crypto Ride because of the volatility that exists, and that's partly because the asset class, or mainly I should say, because the asset class is still very young, so it doesn't take much money to really swing these markets, and it can be crazy. So never invest more than you can afford to lose. I try and say that at the end of every video. And also just enjoy the ride. Don't let your emotions get too involved. And if you're not investing too much money, then that shouldn't really be too hard to really separate the two. Have a great day, and I'll see you in the next video.